Namaste and welcome everyone to Welfichedge YouTube channel. I am thrilled to have you here today for an exciting video. Before we dive into today's content, I want to give a big shout out to all our new subscribers. If you're new here, thank you for joining our awesome community. If you haven't subscribed yet, make sure to hit that subscribe button and turn on the notification bell, so you won't miss any of our future videos. Alright, let's get into it. Today, we have something really interesting in store for you. We'll be talking about the top 10 stocks for long term which can be bought and left for 10 years. Thank you all so much for your continued support, comments, and likes. It means the world to me and motivates me to keep creating content for you. Don't forget to drop a like on this video if you enjoy it, and leave a comment down below. I love hearing your thoughts and suggestions for future videos. Also, if you want to stay connected outside of YouTube, you can follow me on Instagram and join our WhatsApp learning group. Links are in the description below. To select top 10 stocks out of more than 3000 plus stocks, we have analyzed and filtered out on the basis of fundamental concepts, as I will be mentioning them before listing the stocks. These can be done at any time of the year. One quote I remember now, from a legendary investor Warren Buffett, who once said, "If you are not willing to hold a stock for 10 years, then don't even think about owning it for 10 minutes. First thing, I will be applying filtering stocks from Nifty 500 ad. We are interested in companies which are part of top Nifty 500. Secondly, we are going to look at only those stocks for which the market capitalization is more than 10,000 crore. The main reason of me putting these two filters is, we are only interested in those companies which are likely to give us good returns at a reasonable risk. Next filter I am using here is 5-year historical growth. Next filter is net profit margin in the last 5 years, and I am going to consider only those companies that have given me at least 10% or more net profit margin growth in the last 5 years. Let's filter out stocks for APS, which is earnings per share, how much this company is earning per share, and let's consider those companies who have given us APS growth of more than 10%. For that, the first filter I am using here is 5-year historical growth. Second filter is net profit margin in the last 5 years, and I am going to consider only those companies that have given me at least 10% or more net profit margin growth in the last 5 years. Next one is how much of return on equity these companies have given. I am only going to consider those companies that have given me at least 15% average return on equity for last 5 years. Let us now find out the companies which are going to be more and more risky for us, therefore we need to eliminate the riskier companies from this list. For that, the first thing we are going to consider is beta. Let me explain to you. Beta tells you that, what is the volatility of this company versus the overall market. So if Nifty, let us say, drop by 1%, is this company going to drop by 5%, or is this company going to only drop by 0.5%? 0.5% is always better. Our risk is less there, therefore we are going to add this filter, and we are only going to select those companies which are giving me beta of less than 1.5%, meaning, these companies are less cyclic. Second parameter that we need to measure these companies for risk is, how much of shares the promoters have pledged. Let me explain. So how much of promoters' stake they have pledged are given as a security against a loan now. It is very bad if the promoters have given a lot of their stake as security to take loan to run the company. So minimum, this is better. So we are going to consider only those companies which have got less than 5% of their promoter stakes placed against a debt. The third, very important aspect around risk is how much of long-term debt this company is carrying. Higher the long-term debt, the risk is very high for us that company might shut down. Finally, let's rearrange the filtered stocks in ascending order. And that's it. Note these stocks, and let's dive into the charts.